As the title says, we will be talking about closing costs as it affects a buyer. So in the previous video, I talked about closing costs for a seller, and now I'm breaking it down for the buyer as well. A lot of people forget that as a buyer, you also have closing costs. You don't only have to save for the down payment, but there are other fees associated with the transaction that you also need to be aware of and prepare for. And so here I'll be breaking them down for you, helping you figure out what they are. Again, I'm just giving you estimates because everyone's situation is different. And even sometimes when we tell our clients, hey, plan for this, sometimes their closing costs are actually less than what we tell them to plan for. But it's better to overestimate than underestimate. And then now you're trying to find the funds you need to close. So without further ado, let's break down closing costs for you. Hello and welcome back to my channel. My name is Nonye Ononubu. I'm a licensed real estate broker in the Chicagoland area. This channel is geared towards helping you navigate real estate either as a buyer or a seller. So whether you're moving to the Chicagoland area or you're moving from one neighborhood to the other, you don't have to do it alone. Let's navigate real estate together. As you watch, or perhaps you do have additional questions about the process, feel free to put them in the comments below or reach out to me for a consultation. My contact information is in the description below. And make sure to watch till the end because at the end, I'm going to actually show you an example of a condo in my area and just use that as an example. It's not for sale, but just use it as an example to give you an idea of what those costs could look like. Number one closing cost to be aware of is that there will be title company charges. The title company charges will vary based on the title company you're working with for that transaction. The role of the title company is to be sort of like the intermediary, the in-between person between the seller and the buyer for that transaction. What they will be doing is making sure that the seller, the current owner of the home, is the right seller and they have the right to transfer ownership to the buyer. And when that ownership is transferred, the buyer is getting what we call a clean and clear title, meaning that they will give them title insurance and all of that. And in the future, if someone should come and challenge the buyer's ownership, then the insurance policy will kick in. And of course, they're not going to give a title insurance policy if they don't believe that the seller is the right seller. All right. So the title company is going to do whatever they need to do to make sure that the seller is transferring a clean and clear title to the buyer. Unless there are things on the title that the buyer is okay with and willing to accept, but then those things are not covered as part of the insurance policy. All right. So just want to throw that disclaimer in there. Some of the title charges include a lender's policy, and this is for the buyer, right? Some of the fees that the title company is just charging because they are the title company and representing part of that transaction. So there's a portion of their fees that's paid by the buyer. They may also have some additional liens and things like that they charge for, lien protection and stuff like that they charge for, that will be then billed to the buyer for that particular transaction. So like I said earlier, it just depends on the title company, also depends on your location. So the things on there may vary. The second set of charges you will find as part of the closing costs will be loan charges. If you're purchasing real estate and you are getting a loan or a mortgage for the property, the lender you're using will have some of their own fees. They may have a loan origination fee, they may have a credit report fee, they may have whatever it is. Perhaps they covered the appraisal at the time of the appraisal, and so now it's part of the charges that they're having you pay at closing. So that could be it. Also, they will be charging you for your escrow account. Your escrow account is where money is kept for your taxes and insurance. And then when the bill comes, they pay those bills from that escrow account. So they will ask for that money as part of your closing costs for your insurance and also for your taxes. So far, we've talked about title charges. We've talked about loan company charges or lender fees. And now the third one is government charges. With the government fees, these are just things that you have to pay because there are laws and ordinances that require you to pay this as part of the transaction. I'm in Chicago, and so Chicago has a tax that every buyer pays for their transaction, and it's a percentage of the purchase price. So regardless of who's buying, you have to pay this. Of course, there's some exemptions, but most people have to pay it. If you're in an area that doesn't have the transfer tax, then you won't have to pay them. And then also something you may have to pay are recording fees. So part of what the title company will do for, and that's part of their charges, is that they will go to the county and record the transaction with the county. And usually this is done for the buyer's protection because what that recording does, it says that, hey, this property has been sold from this person to this person. And so if the seller tries to sell that property again, the record is there. And so it's actually in a way protecting the buyer. So those are some of the government charges you will see on a closing statement. The final section will include miscellaneous charges. These miscellaneous charges could be anything from paying the inspection at closing to paying your insurance policy for 1 year to paying off some loan that you had agreed to pay at closing so that your debt to income ratio is below the required limit. It could also be broker fees. It could be attorney fees if you're working with an attorney. And so whatever it is, right, those will all be part of your miscellaneous charges. There is another charge that may or may not appear in your transaction, and it just depends on the location of the property. So if the property is located in a homeowners association, there might be some fees happening there where the seller gets some of their money back for the HOA dues they paid for that month when you're buying the home. So that could be some of the closing costs that you may have to pay at that time. All right. So just as a quick recap, you have your title fees, you have lender fees, then you have government fees if applicable, and then there are miscellaneous, which is everything else really. And then if you have a homeowners association, you may have fees for them as well. Earlier, I told you I will show you an example of what this could look like. So let me go ahead and show it to you. Here, I'm going to give you a breakdown of what this could look like in a real life situation. So right here, the purchase price is $350. And let's say we're putting 10% down. I'm just going to use this interest rate because that's what populated on this. This is a Chicago Title Palm Agent app that we use just to estimate the pricing for our clients. So it's a 30-year mortgage, buyer broker fee. Let's just say the buyer is paying it, and then we can change it later on to say that the buyer is not paying it, okay? Seller concession. So if you're getting any closing costs, those will go here. So I'm just going to do it without any closing costs, and then we could change it later. Here, I'm going to put attorney fees because in the Chicagoland area, we do use attorneys. And the cost varies, but I'm going to put 500 here just because, so we're adding this to the buyer's closing costs. So I'm going to hit done. It's going to tell me it's going to be added. I'll say okay. All right. And so now it's stored here. For my insurance, I'm just going to leave what they put there as the default. The taxes, they kind of pulled up their record, so I'm going to leave it as that. If if we know the real taxes, we'll change that number. And now for the HOA dues, I'm just going to put a certain number. I'm not sure. But again, this is just an estimate. Now here, city transfer tax. This is what I was talking about. The buyer may have to pay this. And so this app actually helps us figure out if the buyer has to pay one. So when I come here and click on please select, these are some of the towns where you may have, in Illinois, where you may have transfer taxes. And so I'm going to look for Chicago and the buyer because I want the buyer's own. So the buyer's is $750 per 1,000. So for every $1,000, you're paying $7.50. And so who pays this? It's paid by the buyer. All right. And I'm going to hit continue. All right. So that's in there. And now for the closing dates, let's just pick sometime in August and hit continue. All right, so this is, oops. For this particular property, we're estimating that this buyer will be bringing 54,000 to closing. Remember, they're putting 10% down, and so we have to factor that in. And then also that, which is 35,000, and then they have about almost 20 in additional costs. So there are prepaids and then there are fixed amounts. So let's go here and look at the detailed closing costs. For detailed closing costs of almost $19,000, we have insurance. So paying your insurance premium up front, paying some of your taxes up front into that escrow account so that when the tax bill comes, you are covered. Paying interest for the month of August. So when you close, in this situation, we're closing August 14th. So there are some remaining days in August. Your first mortgage payment will most likely be not in September, but in October. And then in October, you're paying September's bill. And so what they do is they charge you the interest for August. And that's what this 15 days of interest is. And then title fees, closing fees, mortgage policy. This is the lender policy on this file based on the purchase price. And these are also some other title fees that this particular title company charges, right? Like I mentioned, it just depends on the title company that you're working with. So these are some of the title fees. And then these are the lender fees. Again, these are just estimates, and it just depends on the lender that you actually work with. So these are lender fees. And now these are other fees. So your prorated tax credit is a credit you're getting from the seller for the taxes on the property that they haven't yet paid. And then water cert recording fees, attorney fees that we put in, the city transfer tax. And then here you're paying your realtor 3%. So that adds to it. And that's where you get the money from. So let's take away the realtor fee and then just see what that gives us. So I'm going to go here and then I'm going to say it's paid by the seller. And we're going to calculate again. And so now it drops it down to 44,000. So your prepaids are 4,500 and your fixed are 4,500 as well. And then just clicking here on the detailed closing costs. This right here, if this wasn't here, your closing costs would be whatever it is now plus $7,000. So because the tax bill is high, you're getting that money back and that's reducing your closing costs by a significant chunk. So that's why we can't really give you an exact number. Closing costs just depends on certain factors, and that's why we just work in percentages. So usually I'll tell my clients budget around 3 to 5 or 6% depending on the loan type. So now we're going to change this to an FHA loan and see if there's any difference in closing costs with a different type of loan. So I'm going to go here and switch it to FHA. Now your down payment is different, 3.5. And then also I just want to make sure everything else is the same. All right, so this is, let's put it as the seller's covering that. And make sure our transfer tax is in here as well. So our transfer tax is 7.5. And so let's compute that. With this, the cash to close is less because you have less of a down payment. So your down payment is significantly less. However, the prepaids are slightly higher. With conventional, our prepaids are about 4,500 and the fixed were also about 4,500. So it went up just a tad, but we get to bring less to closing in general because our down payment is significantly less for the FHA loan versus the conventional loan. With conventional, we're putting down 35,000. With this one, we're only putting down 12,250. But the closing costs are slightly more for the FHA loan than the conventional loan. with that, we've come to the end of today's video. Hope this was beneficial to you. As I mentioned, the closing costs are in addition to your down payment, and we try to tell our clients estimate 3 to 5%. It could be less, but it's better to overestimate than underestimate. There are some down payment assistance programs that may help you cover some of the closing costs. You could also ask the seller for closing credits to help cover some of your closing costs. It may or may not be available to you. It just depends on the situation. But you can ask, and if the answer is no, the answer is no. Let me know in the comments if you have additional questions. If you haven't already subscribed, please do me a favor, like this video and subscribe just so that it helps me push it out and get the word out to others. It's free to do, so please do it for me and I truly appreciate it. Again, additional questions, feel free to leave them below. If you have something that came up in your transaction and you were like, oh, I didn't know that was a closing cost, put them in there too so that you can help somebody else. And I am linking a video here that shows you the closing costs the seller may have. So feel free to jump onto that video and I will see you there.